But moving on, I'm told the management is waiting, so let's go across. Muthoot Capital that came out with the numbers. Remember, at the end of Q4, they'd spoken about how two-wheelers will grow at 30-40%, expect the NPAs to go down further. And this quarter has been a robust quarter as well for Muthoot Capital. The bottom line for Muthoot Capital in particular seems to have seen a jump of over 200%. What are the key highlights for the quarter and how would the outlook ahead look like? And what's the disappointment that has happened for the stock to correct as much as 9% right now? Let's ask the Chief Financial Officer, Vinod Panikkar. He joins us right now on the show. Good having you, Mr. Panikkar. Thanks so much for taking the time out. How would you sum up the quarter? The NII looked okay. Profit has gone up quite a bit. Provisioning marginally higher. And the NPAs don't seem to have jumped up too much, though on a YOY basis at 7.1%, probably a bit high. What's happened here? What's happened in the quarter?
Good afternoon. Thanks for having me on your show. The quarter has been very good in a sense. The disbursement was at about 485 crores, which is something which we had told earlier also that the business will grow, which led to the loan book growing, the AUM growing to about 2,367 crores. The income went to about 124 crores. The expenses, maybe on a Y-on-Y basis, while the income grew by about 50% plus, the expenses, the interest cost with the main cost did not grow in the same at the same rate, which is why the net interest income went up significantly, and the other expenses, the other operating expenses, same quarter last year, it was at close to 63-64%. That has come down now close to 50%, which is mainly on account of the fixed expenses not jumping in the same proportion as the income, and the variable expenses being few in the form of collection and sourcing cost only. That all led to the bottom line going up, and obviously the numbers are there for all of you to see. From a 6 crore kind of figure, we went to about 20 crores. Now here there are 2-3 significant things that I would like to inform. More importantly, the trend that we saw last year in the last 1.5-2 years, maybe post Demon, has continued in the sense the volumes have been growing. Number 2 is the interest cost, while started getting harder elsewhere. We have been fortunate in the sense that the interest cost has been more or less what it was in the last quarter. And last but not the least, we had mentioned last time that we would be looking at increasing the PCR over the next couple of years to about 50%. This time we have taken an additional provisioning of about 3.5 crores, which is in spite of which we are showing a profit of about 20.6 crores. Going forward, we expect the trend to be maintained, and we hope to come maybe again next quarter with the same kind of numbers or maybe even better numbers. You rightly said that NPA has gone up a little bit, but then that is normally the case in the first quarter after a robust Q4, when a lot of things are done in the month of February and March to bring down the NPA. People maybe relax a little bit in the month of April, and then it becomes too hot for people to handle in the month of May and June. They can't bring down the entire thing that in the month of April. Right. You should see that coming as.
Okay, so those are a couple of highlights, sir. The stock's taken a beating actually post the numbers. It's trading lower. I don't know if NPA is increasing on sequential basis could be one of the factors, but just to assuage your investor concern, you said after a robust fourth quarter, NPAs tend to rise in the first quarter. But tell us for FY19, what's the guidance that you can give with regard to JNPAs?
No, yeah. Last year, we had an NPA on the gross, on the overall book at about 4%. We expect to maintain that number as we in the current year as well. Maybe it could only be better. It will definitely not improve. It will definitely not go up. And as far as the stock prices are concerned, we can't control it. We leave it to the market to decide.
I'm not asking you to comment on the fall on your stock price, but nevertheless, talk to us a little bit more on your two-wheeler business. What was the market share this time around? I guess the company was working towards increasing the market share in two-wheeler financing.
Yeah, We are in the range of 5% on the financing in the financing market as far as two-wheeler goes, and we have maintained that. In fact, the most important thing that we need to mention when we are talking about the business, the volume part, is that we are in the process of reducing our exposure to south, and if numbers are anything to go by, from 81-82% that we were last June quarter for south market, to this time it has been at about 74 odd percent. So as we go along, we tend to de-risk south and maybe get larger volumes from non-south volumes.
Give us some sort of ballpark figure. What sort of numbers are you trying to garner from the non-south market?
Over the next couple of years, we hope to be at about non-south would be in the range of about 40-45%.
Okay. And what about the portfolio mix? The two-wheeler loan book share, how would that shape up over the course of the next 2 years? I mean, you've given us a sense of what your geographical distribution would be. What about the portfolio mix?
The portfolio mix today, it is roughly 90% is two-wheeler, that balance 10% are other loans. We hope that is what will continue. We are in the process of getting in new products. Used car is something which we have started, and that is still in the pilot stage. So I would not want to attribute any numbers to that unless it actually takes shape. So as we in the current year, majority of the volumes would come from two-wheeler and other loans, which is to be read as other small corporate loans that we do, which is 10%, 11% of them.
Interesting. Almost every NBFC was now be looking with a hawk's eye at what the inflation numbers are looking like and what the RBI action could be. Are you worried about the NIMs because of rising cost pressures, rising cost of funds going on into the next 12 months?
Yeah, definitely we are worried, but then fortunately that has not translated into any negative for us, at least in the first quarter. As we go along, we would maybe look at other means of funds, which would ensure that the costs remain steady and there are no pressures on the NIMs.
Okay, what will be the current cost of funds, sir?
This quarter we were at about 9.32, which is maybe one paisa lower than what it was last quarter.
Okay. And actually, one small question. I mean, would you be able to give a brief comment on what do you expect the growth in book to be like over the course of the next 3 years? I'm sure management's take not a next quarter view, but the next 2-3 years view. Do you believe a 20-25%, 30% CAGR is a possibility?
Is definitely a possibility. In fact, we hope to see a book of close to 4,000 crores by end of FY20, and that would be basis our existing business. If other businesses that we are in the process of doing and hope to, and which we definitely hope to do well, if we do that the way we anticipate it to happen, definitely numbers should be better than what I'm talking about.